Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right. We are back with another episode of the Real Estate Investing Club. Today we have Mason Moreland with us. Mason is the founder of Texas Vine Country, which is a vineyard syndicator, a very, very unique niche. I am super excited to jump into this because, Mason, this is the first time I've heard of a vineyard syndicator. So thank you very much for hopping on the show and sharing your experiences with us.
No, man, thanks for having me on. It's always a pleasure to chat, and I'm glad to be here. It's definitely a weird niche. I can probably count on one hand how many people have even dabbled in
you and
space.
Two other people.
Yeah, pretty much. Yeah, I could actually that's about right. Yeah, pretty close.
Right on, man. Well, I'm super excited to learn about it. I told you before we hopped on the show, we always start with stories. We like to hear kind of how people got to where they are. How'd you get to becoming a vineyard syndicator? So why don't you, jump into your story. How'd you get there?
Oh man. So, I was 6. No, we're not going to go that far back. That's a little too crazy. But yeah, I just loved wine since the age of 6. It's crazy. Sorry, you didn't know this show was going to go PG-13 in like the first 10 seconds, did you? No, I've always been super entrepreneurial. Obviously probably to my benefit now, but probably to my parents' detriment when I was a kid. It's probably annoyingly so, but my dad really fostered it. He was a entrepreneur since I can remember. He's always trying to start a new company, build a new idea, build something else on the side, get more real estate, things like that. So I really grew up with a great role model in my dad doing that. And I've always had a passion for biology, which is a weird thing to dovetail into real estate. I'm a herpetologist by training, so reptiles, amphibians, that kind of stuff, mostly like genetics. Thought I was going to be like a professor or the next Steve Irwin or something like that. And
is that what you studied in college, was biology?
Yeah. So I'm actually, I'm like a wildlife biologist, worked for Texas Parks and Wildlife for a while. Wrapping up here in the next couple of weeks, my W-2 working as a environmental consultant. So been doing that for I guess a little over a decade now, but been involved in like research type stuff for in my early career, doing a lot of genetics research and stuff. But kind of quickly realized that like while I like that and it's very interesting, it wasn't really where my fire was. Like my fire was really creating something really valuable. And that actually caused me in college to change majors. I was like, I don't want to be like a biologist, right? I don't want to be chasing grant money for the rest of my life. I'm going to go over here to the natural resource management side, which I like to call my applied rednecking degree. So basically it's how do you take biology and apply it in the real world with, combining human interface, business, biology, and economics all at once.
Right up your alley. It sounds perfect.
Yeah, it's a more integrated type of degree, and I absolutely loved it. And one of the, that college was super entrepreneurial. Most of those folks in there, probably half of them go to government jobs, and then the other half start their own businesses. It seems like so. It's a very diverse group, but that's really when I relit that fire and realized I really want to do something that's tangible and concrete. And right out of school, right after I graduated, started working as an environmental consultant, but immediately started investing in real estate. So me and my dad and my brother joined together and kind of we're looking at each other like, you guys are all really pretty intelligent people and we all like each other a lot. We should probably invest together instead of doing this all on our own, right?
That's a good litmus test right there.
Exactly. We all like each other. All right. We can tolerate each other, at least for the past 30 years. Let's do this together. Why not? So we formed our own company, Moreland and Sons, and we've been investing in real estate. Started out, doing single family homes, things like that, and eventually got to the point where, all along through here, I'm always learning how to underwrite, honing that skill, getting really good at deal analysis and things like that, finding deals, cold calling, finding off market deals. and testing new businesses. Honestly, underwriting things like laundromats and farms.
But we got to talk about that later, because I'm actually my girlfriend wants to buy a laundromat, and so I just started marketing to laundromats. But keep going down your story. I don't want to deter you there. No,
you're good. That's that's sort of what led me down this road. Is we were looking at biting off our first apartment building by ourselves, like not syndicating or anything. And it was about a 50 unit kind of C class, but it was in a real stable market, like small town market, but it had like a hub for the whole region for a couple of different businesses, distribution hub. So it was real stable. But it had a laundromat in there, and that's where I first started underwriting those. And we got to the physical due diligence, and we're just like, this is a mess. Like, even if we get in here and buy it, to ethically rent this out and to the tenants, I need to doze this thing and rebuild it. Like, it's structurally unsafe. Let's not do this. So that's when we really started looking into syndication, because, for the past, 8 or 9 years, I've been listening to Bigger Pockets and things like that. Every time there's a syndication podcast, skip. So I was like, I'm never going to use that. Right. Joke's on me. Naturally. That's usually how it works.
That's how it works. Yep.
But we started looking at syndication for apartments, and at the same time I was underwriting vineyards, because I thought it would be cool and interesting to live on a few acres and have the vineyards help pay for the house, that kind of thing, house vineyard hack the house. And I was looking at the economics. I was like, man, this is awful. Like, there's so much labor involved. This is nuts. Like, this can't function this way. And that's when I started networking a lot more. I got to know some more operators. And really came across what our business model is now that makes it a lot more economic, and started applying those same concepts from multifamily and syndication to the vineyard side.
That is really interesting. I want to get more into kind of the details of how you do that. But first, I mean, it's really cool that you and your family got together to do this. I've always been jealous of people who, they grew up in an entrepreneurial family, they grew up in a real estate family, and they just kind of like were pushed down that path. So kudos to that. That's very great. And then you said you mentioned a few things down your course of the story, where you're talking about underwriting, finding off-market deals. So it sounds like underwriting is really kind of a core skill of what you kind of bring to the team, is doing the due diligence, doing the underwriting. So how do you, I mean, you're just going into it, but I want to go further into that. How do you underwrite the vineyards? Like, just give me just out of my own curiosity, give me the 10,000 foot view of how the vineyards work in terms of a underwriting standpoint.
Look, if you can underwrite an apartment or commercial development, and you can figure out just the basics of how a vineyard work, or get somebody on your team that understands that niche asset, it's just another development play. So it's really very, very similar to underwriting that. So you're starting with your raw land cost, your materials cost, your labor cost. Then you start rolling in during your operational period. How much does the asset appreciate? How much cash flow is it throwing off? What are the instead of rent prices, we're doing, what are the yields and the price per ton? So it's not a whole lot different from underwriting a development.
So do you lease the vineyard to a vineyard operator, correct? That's how the model works.
No. So we actually fully own and operate all of them. So we our primary one of our primary partners, our principals, started the first vineyard management company in the state of Texas. I was the first guy to bring mechanized vineyard, like large mechanized vineyard equipment into the state. So we really lean on him a lot on the operational side. We have a good sort of symbiotic relationship with all of our partners on Texas vine country. We have a farming partner that has, almost a century worth of farming experience in our area. Wow. And all those ties and land and things like that they bring to the table. My family on the real estate and financial side, and then Rusty on our operations side. So we actually do all of it, and we actually sell the fruit to the winery. So they contract out like a certain amount of acreage or a certain amount of tons, and then purchase that fruit.
Wow. And so it sounds like, that model can be used to pretty much any type of crop. It doesn't have to be a vineyard. It could be used for corn or soybeans, whatever it is that you want. That's pretty interesting.
Yeah, it works really well for permanent crops. So stuff you're not having to replant every year. For annual crops, usually it's a lease. So people will lease their land out to another operator. That's really common.
Interesting, huh? So you mentioned off market. I never, vineyards, there aren't, there's how many apartment buildings out there? Thousands of them. But vineyards aren't that many. There aren't as many as apartments buildings, that's for sure. So how do you go about finding off market vineyards? Same process, right? Just cold calling.
Yeah, cold calling. So for us with a development focus, for what we do, it's so heavily based on doing things at scale. So instead of operating in the for an analogy in the 50 to 100 unit apartment complexes, the vineyards that we do are more equivalent to like that 300 to 500 unit apartment complexes. They're really big, take advantage of a lot of economies of scale, and we operate them almost touchless. So there's almost no humans working in there. So for an equivalent, I guess to give you a scale of what we do is most vineyards in the state of Texas are between 15 and 50 acres. Pretty small. Now, 50 acres is still a big vineyard, but our minimum development size is a half a square mile. So we do 320 acres at a time.
Wow.
And what that lets us do, and we do a completely different trellising design and everything. What that lets us do is in a traditional design and traditional model that would take 40 to 60 people to operate, and seasonally even more potentially during the year. Obviously they'd have the winter off, the vines are asleep. But for us, we operate it with 2 to 3 people, and that's all based off of that mechanization. So buying new vineyards or buying existing vineyards is a little bit more difficult for us, right? Because they don't necessarily tick all our boxes of size, mechanization, and design. So once it's in, once the infrastructure is in, it's a lot harder to change it, go back and change it. So there are some vineyards out there that could be acquisition targets for us in Texas, but not that many. We're already one of the biggest operators in the state, but for acquiring deals for our developments, it's cold calling. What I do is I pull up the map of the county and I outline all the parcels that are irrigated, and then go pull all that data off the county list and separate it out my out of town and out of state owners and in town owners on one side and start cold calling.
That's great. It works for everything. Cold calling is the salve for off market properties. That's for sure.
Well, if you don't know when to shut up, like I do, it's a great line to be in, right? You just talk people's ear off and be nice. Like, okay, I can do that. That's fun.
What question was I going to ask next? Oh yeah. So the syndication side, I've heard of syndicating apartment buildings, pretty much anything. I've never heard of syndicating vineyards, but it makes sense that you could do that. What kind is it? A typical ROI for the investor, or is our vineyards much more profitable on the back end?
So it depends on what metric you're looking at. So for me, in the vineyard space, it's a lot different from a traditional buy, rehab, refi, or value add type of apartment deal, right? You're looking at anywhere between 9 and 15% cash on cash annualized, a multiple of like 1.5 to 2, something like that, right? Over your investment hold period, just ballparking what I've seen lately. And a hold period of maybe 3 to 5, sometimes 8 or 10 years, hold period. For vineyards, it takes a long time, especially with development. So it is a little more akin to a development play in the traditional real estate space. So for us, it takes a full year to get it installed.
So you mean planting the vines, right?
Mm-hmm. Okay. Like literal installation. So we're going in and we're driving all the T-posts in the rows to build the trellis, all the wire in posts, building a barn, that kind of thing. Yeah. We're starting essentially from raw, just row crop land.
Buy the dirt.
Yeah, it's just dirt out there, or cotton stems that have already been harvested. So right now we're dealing with one that's it's been blowing wind about 40, 50 miles an hour for the past 2 weeks. Wow. And we haven't had rain since November. Oof. So we've got sand dunes built up out there that we need to get out there. But thankfully we just got some rain, so we're going to be able to work it. But back to your question, I suppose. It
Different
takes a long
problems
time.
in the vineyard industry is
Yeah,
watching out for sand dunes.
different problems. I'm fighting sand dunes and revegetating things from row crop agriculture for the last 100 years, which is good. It's good for the soil to be rested like that. So it's that makes me feel good on a biologist note. But it takes a long time. So it takes 5 years from planting to get into full production. So you're really not seeing any cash flow, or it's just nominal during those first 4 years. Year 4 is really when you get up to, you might be hitting 50 or 80% of production, but year 5 and beyond is where you get up to 100% production. So it takes a long time, but we're able to meet those same IRR type goals that you would see in multifamily over a 10-year period. And that's because the actual cash on cash returns are really good during the years it's producing, right? And it produces for 20 to 30 years before you're starting to have to replant. So, you're looking at stupid numbers during the annualized cash on cash return during some of these years, high 20s, low 30s. But, over the span of the whole period, on year 10, you're looking at, like a 15 ROI or
IRR.
IRR. Thank you. Yeah. I was like, number just left, or the term just left. You're looking at, more of that 15% IRR over the long term. So the whole period is a lot longer, but that also builds in, what we name our individual vineyards. They're all Texas legacy vines. So each block is called Texas legacy vines, block 1, 2, 3, et cetera. And the reason we do that is because it's a legacy play, right? These things will last a long time. We have an indefinite hold period. We have several exit strategies, and we build ourselves to be attractive acquisition targets. But, we build these deals to have people put them into their family office or into their family trust and be passed along. So they're still receiving that cash flow in, 50 or 100 years.
That is, that's pretty cool. And it's 5 years. I know nothing about biology, so this is probably a very naive question, but it just seems like 5 years is a long time to take to plant trees, essentially, right? I don't want to go too far into the biology side. This is a real estate show, but just give me a little bit of a teaser there. Why does it take 5 years to create these vineyards?
So the 10-second, like 30,000 foot view is think about the vine as a straw. And the soil is holding all the nutrients and all the water, right? So with our model, we're trying to push really high yields at still really high quality. So you need to force a lot of water and a lot of nutrients through that straw. And you need to have a big canopy of leaves to be able to harvest that sun energy to pull all those things up, right? And turn them into grapes. So it takes 5 years for us to build that straw. So we need a nice, thick, sturdy vine. We need to train it up onto the wire. And we need to build a very resilient vine to be able to tolerate that for 30 plus years.
That is interesting. Well, shoot, Mason, I just took a look at the clock. We have passed our limit, but damn, this has been an eye-opening experience for me, and maybe I'll have to look into vineyards at some point.
Yeah, it's fun. It's always fun to look at different things as real estate. People always ask me like, so what made you get out of real estate? I'm like, well, there's a half a square mile of land out there and about $2 or $3 million worth of improvements on it. I'd call this still real estate. It's just
still the same
collecting
thing.
Rent. You're just selling things coming off of it.
Yep. Right. Well, hey man, we got to jump into the quick question round. I appreciate you sharing everything you've done so far, but let's jump into it.
Let's do it.
All right. The first question, it starts with books. I'm a big bookie, and it doesn't really have to be books. It could be any form of education. So just give me 2 recommendations, one for general life wisdom and one for real estate specific.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com. So if you are interested, head on over there. With that said, let's get back to the podcast.
For general wisdom, definitely the Bible. Whether it's Old Testament, New Testament, great wisdom to be found in there, whether it's financial or moral. Found myself leaning more heavily on that lately, which is good. And I've had good results. So that's always a positive. The other one is definitely How to Win Friends and Influence People. It talks a book, yeah. It puts a lot of the principles that are talked about both in the Bible and other places in other books, like into very concrete, like, here's what you do. This is how it works. Yep. Here's the results. Like that's why I love that book. I go back and read it every couple months, or at least listen to a condensed version to it. Just like get it in your head. It's pretty easy.
Yeah. That's one of the books that I recommend, or I myself try to read, every few years. I never liked the title. I thought it sounded kind of odd, but the content of that book, it's just it's so solid. Just how to treat people correctly.
Yeah.
Or well. That's good. Bible, great suggestion. How to Win Friends, Influence People, great suggestion. Got to give me a real estate one though.
Okay. So for real estate specifically, so this is a little bit real estate adjacent, but 10X Grant Cardone.
Yep. All right. I'll take it.
I don't like everything Grant Cardone, and some of that book is I throw it out the window, but there's some great stuff to pull out of that.
The man's doing something right. He's got, I don't know how many billions of dollars AUM, but he's
exactly. He's doing something right.
All right. That moves us on to the next question. And this is for your younger self. So if you could go back to the Mason who was still considering being a biologist, go back to him, look him in the eye, and give him one piece of advice moving forward.
Choose who you associate with wisely. So narrow it down to the people that are going where you want to go and living how you want to live. So try to be that fifth person on the rung as far as how good you are in that 5 people that you hang out with the most, like keep
the crappiest person in your group.
Yeah. Don't purposefully try to bring yourself down, but aspire to associate with those kind of people. Like don't just remain in a negative space if you're in a negative space, and aspire to bring more positive people into your life and be a positive influence on theirs. That's changed my life being able to do that for sure.
Yep. No, that is solid advice, and good advice for any age. Doesn't matter if you're young or old. The people you surround yourself with are the people that you become. So
absolutely.
Moving on. Next question. And this one is for the US. I'm pretty sure I know what you're going to say here, but the United States, it's a big place, plenty of places to invest. So there are, plenty of places to invest. What area are you most excited about investing in today?
Right now, definitely Texas. Close second, the Southeast US. So definitely always looking at traditional real estate in the Southeast right now, and in Texas. It just depends on the area. But I think ag land in general is actually really undervalued right now. We may be seeing the effects of that with all the instability going on in the Eastern European plains. But being able to grow food and products like that is hugely important. So ag land, Texas.
Perfect. I love it. This is a quick question round, so I don't want to divert us too much. But you mentioned the war in Ukraine, and I've read articles that we're going to have a wheat shortage because a lot of the global supply of wheat comes from Ukraine. I thought that was really interesting. Is that, I guess that's it. I don't want to go too far into that. So let's I just wanted to say that point. Moving on. The next one is for your strengths. So we all have unique strengths that we give to this world. You are no exception. So what is your Superman strength? What are you exceptionally kick-ass at?
Definitely underwriting. So like if you give me any kind of business asset, I'll figure out and build a whole ecosystem for it to live in, and you'd be able to plug in a few variables and spit out economic numbers.
Perfect, man. Love it. All right. That leads us to the last question. You've given us a lot of good advice, a lot of good things to consider. I'm sure there's people out there who are thinking about maybe looking into vineyards, and you'd be a good person to be a sounding board. So how can people reach out and get in contact with you?
Best way is definitely LinkedIn, fastest way. So I'm a LinkedIn junkie most times. So look for me on LinkedIn, Mason Moreland, 1 O in the Moreland, or on TexasVineCountry.com. Just throw something into the contact us form and say, hey, I want to chat. Happy to connect and chit chat. As I said, I don't know when to shut up. So I love to meet new people, love to talk.
Perfect. That is texasvinecountry.com, correct?
Yes, sir.
All right. I'll put that in the show notes. So if y'all want to reach out to Mason, just go ahead and click the little more in the description. It'll pop down the full description. In there, you can find his URL. Click through and say hi. So Mason, again, thank you very much for hopping on. It's been a pleasure.
Dude, thanks, Gabe. I appreciate you having me on.
Yeah, absolutely. For everybody who's here with us today, thank you guys for showing up. You were the reason we do this. So if you have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. Other than that, I hope you have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.
Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode and were able to pull some actionable advice that you can go home with and apply to your own investing business. Before you go, I have a gift for you. If you're a new investor looking to get started or an established investor looking to take your business to the next level, I've created an ebook just for you available on the website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find a deal that's actually a deal, how to finance that deal with little to no money down, and how to exit a deal for maximum value. And if you get the ebook today, I'm going to bury you in bonuses, 7 of them to be exact. First, you'll get the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating real wealth in real estate. Then you'll get the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools and systems and even the vendors we use to grow our business. After that, you will get the top 100 best performing keywords pack, which will give you the exact keywords we use to target leads online and generate leads without having to lift a finger. Next, you'll get the contracts bundle for wholesaling and renting real estate, which will give you access to all of the contracts we use in the field to execute all types of transactions. After that, you'll get the Investor's Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automagically from those calculations. Next up, we'll give you the Investor's Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And finally, you will get the Wholesaler's Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. I know that is a ton of things to say. I'm glad you were able to stick with it. So you'll get both the ebook and all of those 7 free bonuses when you download the ebook today. All we charge is the admin cost to run the show. So if you are interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the ebook bundle at the top of the page and take advantage of that deal. With that housekeeping item covered, I hope you have an absolutely fantastic day and even better week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.